I'm sorry, Representative Bachman, it's not a value-added tax, it's a single tax, and if I invite every American to do their own math.
He is the candidate of the moment, Herman Cain, and he says a lot of that is because he has a simple plan, 999. 9% personal tax, 9% corporate tax, and 9% sales tax.
I like the 999 plan, especially with the sales tax part of it.
But that sales tax part of it would mean an 18% tax on purchases here in Arizona. So is that a tax hike, or do average folks still come out ahead? Tonight, we are talking 999 and politics unplugged. Good evening, everyone. I'm Frank Camacho. This is Politics Unplugged. Herman Cain says his surge in the Republican polls comes down to one thing. He has a simple, clear-cut plan, 999. He says it's easy to understand and will save most Americans money. And that is tonight's hot topic. And joining us tonight to take a closer look at the Cain plan is Steve Slivinski from the Goldwater Institute. And Steve, thank you very much for being with us. Welcome.
Thanks for having me.
Is this plan going to save most Americans money?
Well, I think overall you have to think about it in broader terms. I mean, the way we tax income in this country is actually a bit odd. We actually penalize a lot of good investment. So what Cain's plan is trying to do, at least in the interim, is try to create some kind of way of taxing consumption as opposed to investment. Now, over time, you've got to wonder about what this is going to do to the economy. In the short term, on paper, it's probably going to look like a few folks are going to pay more than usual, and that's inevitable whenever you transition out of a tax system like one we have now at the federal level, where folks at a higher end are paying a higher rate. If you're trying to level those rates down, the taxes have to go somewhere if you're going to make it revenue neutral. And so that's inevitable. But the question is that worth the cost? And the cost right now, anyway, is investment that doesn't happen. The benefit, though, I think arguably, is that you have that liberated investment that would go to more job creation, more personal income growth. And so if in the short term, maybe there's going to be a slight tax shift, but as a result, you actually might at the back end have more economic growth to compensate.
This is going to be a national sales tax, right?
That's part of the plan. So part of it's going to be a 9% flat income tax, a 9% business tax is what he calls it, and then 9% national sales tax. And presumably, at least, if you read the Herman Cain website, they suggest that this is sort of a transition to an overall national sales tax, which of course begs the question, why spend a lot of time working on the interim step when you really want to be going toward the other end? Why not go full force into one or the other? But overall, I think this has been a really good institutional way, politically anyway, for folks to talk about tax reform generally and really how we do things in the country.
Okay, let's talk a little bit about some numbers here. In Arizona's sales tax rate, for many, we're talking a combined sales tax rate of 18% or more. In Phoenix, there's a 6.6% state sales tax, 7.7% county tax, and a 2% city tax. That puts us at 9.3. Now, you add Cain's 9% on top of that, that's 18.3. Is that a good thing, a bad thing?
Well, it would be great if we were getting rid of other taxes altogether. I think one of the nice things about a national sales tax is it presumes that you're getting rid of the income tax.
You bring up an interesting point, though. You're saying if it's good if we do other things.
Right.
Is the Cain plan a standalone plan?
I don't think it can be. I think my concern is that if you have this interim step, you get locked into this box. It's very difficult to get people in Congress weaned off of tax revenue. So if you create this system that's sort of this three-legged stool, if you want to call it, this hybrid system, they're going to get addicted to that revenue, and they're not going to make the next transitional step, which is to a full-blown consumption tax. And so you'll be stuck in this tax purgatory where you've got these kind of competing incentives that might not actually be for the betterment overall. But I think, again, it requires a rethinking of what kind of taxation we're doing.
Okay, full-blown consumption, what are you talking about exactly?
Sure. There's two things you can do with your income when you receive it, of course. You can invest it or you can spend it. Investment actually includes savings, for instance. The idea of a consumption tax assumes that we're always going to tax the portion that you consume, the portion that you buy things with. The other part you save, the other part you invest, you keep that tax-free. And there's sort of hybrids like that, like certain types of IRAs we have now, 401ks. Those are an attempt to try to get closer to that system within the current environment. For instance, the flat tax that Steve Forbes talked about in 1996, and actually it sounds like Rick Perry will be talking about very soon. It's an attempt to do the same thing, except to do it through the income tax side. It basically says we're going to tax all income rather at one specific rate, but we're going to let people exempt the sorts of investments they make. So all that's left is the consumption side. Contrast that with, say, a sales tax, which basically says we're not going to tax any income whatsoever. We're just going to tax you when you buy a product or a good. And that's really the two distinctions. You can have them share the same tax base as a technical matter, but some of it looks different. You know, for the flat tax, you have to file a form, but the other one you just have to make sure you're accounting for it right on the receipt.
Are we, is this a feasible plan given the world economy that we're in right now?
Well, I think, let's put it this way, I think it is. A lot of international tax plans, other countries, for instance, are cutting taxes on investment. There was a move toward cutting corporate income tax rates internationally. It's been continuing. There's been a general sense that taxation on capital is too high, and so there have been some countries that have been cutting their capital gains taxes. United States is actually behind the curve on those sorts of things. Now, whether this can be handled just by simply cutting the corporate income tax, redefining the corporate income tax base by getting rid of a lot of these stupid credits that we see in the tax code, that's an open question. The broader question, I think, and this is what the 999 plan or the flat tax ideas try to get at, is if we're going to do that, let's go ahead and try to do a much broader thing to get ahead of the curve, get ahead of other countries. Hong Kong has a flat tax, for instance, so they've done quite well for many decades as a result of having that. So there are some countries that have tried these sorts of things, but again, it's a matter of trying to reconceptualize how we tax things in the United States, and that's a bigger political issue.
Yeah, you brought up a very good, interesting point earlier about whether or not this can get through Congress. Well, another big question is, can he get it through Congress? And if reaction from his GOP opponents on the campaign trail is any indication, the answer appears to be no, he cannot.
The fact of the matter is, I mean, reports are now out that 84% of Americans would pay more taxes under his plan.
I don't think so, Herman. It's not going to fly.
Unfortunately, none of my distinguished colleagues who have attacked me up here tonight understand the plan. I invite every family to do your own calculations.
You've done your calculations on this,
Yeah, a little bit.
Yeah, where does it go? What does it look?
If you look at the general sense, again, as I said, if you're transitioning from currently what they call a progressive or graduated income tax system.
But he doesn't talk about that.
He doesn't, and that's just it. And I think a lot of the concern about the plan, and again, I've got concerns as an economist because there's some things that you can do better with based on what he's doing. Part of the problem is that he's not explaining it well, and maybe that's just a political issue. But part of it is also, again, you're transitioning from a system that people seem to have gotten used to, one that doesn't work very well, but people seem to have gotten used to it, to a point where you're making some hidden taxes very explicit. And I would argue we're still paying those taxes. And in some ways, this actually comes to a broader question about what should government be doing if we're going to be raising taxes across the board, or where they're going to be trying to shift taxes. The point is we're paying for a bigger government than we should have, I guess. And so part of it is if you make these costs explicit, people might actually start wondering more about what government's spending their money on.
Yeah, let's look at very quickly, $40,000 for a person making $40,000 with only a standard deduction. The tax burden right now is $4,700. Under the Cain's plan, $3,600. It's a savings of $1,000.
And it's interesting because, well, and it's incidentally, that includes that standard deduction, for instance. And there's one of the things you can do with a consumption tax is one of two things. If you have a flat income tax, you can have a deduction, kind of like what we have now for per person for families, so they're not being taxed to basically up to the poverty line. You can basically keep people in the poverty line tax-free, or you can give some kind of rebate if you have a sales tax, for instance. And early on when the Cain plan came out, it wasn't entirely clear which way he was going. Now it looks like he's opting for what they call some kind of tax credit to give to people so they're not penalized on the income tax side. In fact, today, I believe, or on Friday rather, he said something to the effect of, if you're poor, it's not a 999 plan, it's a 909 plan. He was referring to the flat tax portion, saying that zeroes that. So again, it really comes down to the overall calculation you're using. It's going to be different where you are in the income spectrum.
Okay, one last question, and is it more equitable? Is 999 more equitable across the board for everyone?
If you look at just one side of the equation, it doesn't look that way. If you look at both sides of the equation, by both sides I mean not just the taxes are being paid, but the economic growth that's being generated. I think consumption taxes generally, whether it be a flat tax or a national sales tax, just generally speaking, and looking at states that have income taxes versus those with only retail sales taxes, the states that have only sales taxes, no income taxes, tend to do better. I think you can really make the broader claim that if you had a very true tax that taxes only consumption and not investment, you'd have a much bigger boom on the economic side of the equation. And so then, in some ways, I think the boom would even out and have actually probably surpassed the other side of the equation. So again, looking at both sides of this issue are going to be important, not just the tax payment side.
Okay. Steve, thank you very much for being with us. Thank you for clarifying a very complicated system. It's a complicated issue.
Trying my best. Thank you so much.
Okay.